Hey everyone, welcome back to Aquavest. This is your go-to source for strategies in investing in the world's most precious resource, water. So today we're diving into 4 ETFs, which are powerful ways for investors to get broad exposure to the water sector without the hassle of picking individual stocks. Whether you're interested in utilities, technology, or global diversification, there are several exchange-traded funds that are designed to help you capture the growth and stability in the evolving water market. In this video, I'll break down the top 4 water ETFs for 2025. I'll compare their holdings, their performance, the strengths and risks, and give you actionable tips on how to use them in your portfolio. All right, so let's get started. So before I introduce each fund, let's quickly review why water ETFs are a compelling choice. First, the water sector is diverse. It spans utilities, equipment makers, tech innovators, infrastructure builders, and global conglomerates. With an ETF, you can get instant diversification instead of placing your money on only 1 or 2 companies. Second, many water-related ETFs trade in the international markets, and they offer built-in global exposure. So this helps reduce home country risk and helps you capitalize on the worldwide water trends. Third, water ETFs are generally low maintenance and cost effective. They typically offer quarterly dividends, professional rebalancing, and transparent holdings, all in one single easy-to-buy package. So if you're looking to invest in a theme driven by climate change, population growth, and infrastructure upgrades, water ETFs are a practical and relatively defensive way to do that. Not all water ETFs are created equal. Here are the most important factors to consider when making your choice. Focus and holdings. Does the ETF target mostly U.S. companies, or is it global? Is it mostly utilities, or is it technology and industrials? Expense ratio. It's important to consider the lower expense ratio is generally better, but make sure that you're not sacrificing performance just to have a low expense ratio. Liquidity and size are also very important. The larger, more liquid ETFs are easier to trade, and they're typically more stable. And of course, we want to focus on performance and yield. So look at historical returns, but remember to also look at capital growth and dividend yield as factors to consider within the performance overall. And also, of course, the top holdings are important to take a second look at and ensure that the ETFs aren't concentrated only in these large names, but there's equal weight and there's more exposure to diversified companies within the ETF itself. So let's take a look at the top 4 ETFs to consider. We're looking at Invesco Water Resources, which trades under the ticker PHO, First Trust Water, the ticker is FIW, Invesco S&P Global Water Index, the ticker is CGW, and Tortoise Global Water Fund, which trades under the ticker TBLU. So PHO is the oldest and largest U.S. listed water ETF. It holds about $2 billion in assets. It tracks the NASDAQ OMX U.S. Water Index. It's balanced across utilities, equipment makers, filtration tech, pipes, infrastructure, and testing systems. And the top holdings include American Water Works, Danaher, Xylem, Thermo Fisher, and IDXX Labs. FO boasts a strong long-term track record, generally keeping pace or exceeding the S&P 500 on a total return basis over the past decade. It offers modest dividends and a well-diversified portfolio, making it a solid all-weather fund. The expense ratio is 0.60%. It's a little bit higher than the S&P index funds, but it's reasonable considering the water niche. So who is this for? This would be for investors who are looking for proven balanced exposure to the full breadth of U.S. water-related industries with a tilt toward stability and liquidity. ETF number 2, First Trust Water. This is the equal-weighted play. It tracks the ISC Clean Edge Water Index and has over $1.5 billion in assets. Unlike PHO, FIW is equal-weighted, meaning holdings start off with similar weights, so you're not overly reliant on any one giant stock. It includes equipment providers, industrials, and utilities. Examples include Roper Technologies, A.O. Smith, Pentair, Ecolab, American States Water, and IDXX. FIW delivers one of the strongest total returns in the sector, especially in recent years, and this is partly driven by its weighting strategy and exposure to small and mid-cap stocks. Its dividend yield is moderate, but not a primary driver. So the expense ratio is slightly less than PHO at 0.53%. So who is this for? This is for investors who want a balanced exposure across the water industry and a variety of market caps with a history of outperformance. So this is for someone who is looking for adding both small cap and large cap water stocks to the portfolio in an equal weighted manner. So let's move on to the third ETF, which is CGW, Invesco S&P Global Water Index, which is a truly global play. It tracks the S&P Global Water Index and currently manages around $1.2 billion in assets. Roughly half of the fund is allocated to the U.S., while the rest spans Europe, Asia, and Australia. Top international holdings include Veolia, which is in France, Geberit, which is in Switzerland, and Suez. CGW is more concentrated in utilities, but still includes infrastructure, technology, and select industrials. So what about the performance and yield? Slightly more dividend yield than the prior ETFs, and that's due to the international utility exposure. Its historical returns are strong, and it can outperform when global water themes trend. The expense ratio is 0.57%. And this is for those who need that geographic diversification, those who are seeking to add international blue chips along with leading U.S. water firms. So let's take a look at this last one, which is the Tortoise Global Water Fund, TBLU. TBLU recently reorganized from the Ecofin Global Water ESG Fund, EBLU. So it's now officially known as the Tortoise Global Water Fund and trades under the ticker TBLU. This ETF is designed to provide investors with diversified global exposure to water infrastructure and management companies while maintaining a strong commitment to environmental, social, and governance standards. TBLU holds approximately 46 companies in the global water value chain, and that includes utility operators, infrastructure providers, technology innovators, and water equipment makers. The fund only includes companies that pass rigorous ESG screens, ensuring the portfolio is forward-looking and aligned with sustainable business practice. So the top holdings here are Ferguson Enterprises, Geberit AG, which is that Swiss company we mentioned, American Waterworks, Xylem, Veolia, which is in France, and essential utilities like Pentair, Suez, A.O. Smith, Severn Trent. So you see some of the same names we've seen in some of the other ones. There's just different balancing of the portfolio in the different ETFs. And the 1 year returns about 14% with a dividend yield of 1.2 to 1.3% paid annually. And the expense ratio is very competitive for a water themed ETF at 0.40%. So here there's exposure to North America, Europe, and Asia. There's a focus on developed markets and key infrastructure players. It avoids major environmental controversies, making it a long-term pick for those impact-oriented investors. So this is for those who are really focused on adding ESG-centric global diversification to the portfolio. There's a blend of utilities, technology, and infrastructure exposure all in one fund, and there's a commitment to sustainable and responsible portfolio growth. So what about the risk? There are a variety of risks with these ETFs. There's regulatory risk, as all utilities face rate regulations. There may be policies that can squeeze margins or change prospective business practices when regulators in these various geographies change how they are funding or how they're restricting water companies within their region. There's also economic sensitivity. Some of these holdings are tied to industrial or infrastructure spending, and some of these are cyclical categories. And then, of course, there's currency risk. There's global exposure. So there's currency fluctuations, especially for those that have more of that international exposure. The ETF that we talked about earlier that is exposed to Australia, Asia, and Europe. There's various currency risk associated with all the fluctuations in all those various currencies. And there's also a concentration risk. A lot of ETFs have meaningful weights in just a handful of stocks or industries, and this can also amplify volatility. So pay attention to the concentration there, and maybe we're not picking multiple ETFs, maybe the right ETF for the portfolio at the right time, depending on what type of exposure you're seeking as an investor. So overall, water ETFs give a simple, diversified, and effective way to invest in the world's most essential and increasingly valuable resources: PHO, FIW, CGW, TBLU. These are each ETFs with unique strengths. They have U.S. leaders and global sustainability champions. Let me know which of these ETFs is most interesting to you. And of course, this is not investment advice. These are just ideas and information for you to consider and dive into on your own. And so do your own research and consult your financial advisor and let me know what you think. And in the meantime, stay hydrated.